incapable of keeping up with the demand needed in order for mass adoption. The scaling of Ethereum is subpar. That's why we need layer 2 solutions like Arbitrum, Polygon Matic, or even Optimism. There are a litany of layer 2 solutions but built by people to stack on top of Ethereum's network to help scale it up to an appropriate mass adoption threshold. Today, we are going to be going over Arbitrum because Arbitrum's airdrop is happening in 18 hours and 25 minutes. That's when the claim will be going live. We're going to be comparing it to Optimism and Polygon Matic, just to give everyone a good understanding, a foundational level overview of what Arbitrum is and how it plans to scale Ethereum. How was that, TikTok? Was that a good intro? That was good. If you guys want to come over to the YouTube live, feel free to come over there. Yeah, you can follow along over there. That's the main advantage. Otherwise, I will be reading out as much as humanly possible for everyone so that they can see. Let's just finish getting this up. I swear to God, if this says I'm not live, I will lose my mind. Pop out chat. All right, cool. Let's see. Let's get into it. So, Arbitrum, the claim, the airdrop is happening in 18 hours, so literally tomorrow morning it appears. Now, what is this claim going to entail? There is a small portion of the 10 billion Arbitrum tokens that are going to be going out to people who have been active on Ethereum's mainnet with different things. Oh, there we go. What's up? Happy to see you here, my dude. I'm very glad to see that that the live stream's actually happening. Eric, is that you? Yeah, same profile photo. Cool. What's good, Eric? So this is the initial token distribution. So we have 17% going to investors. We have 1.1% going to a DAO for Arbitrum ecosystem, 11% for individual wallets. This is going to be the airdrop. We have 42% going to the DAO treasury. So that's pretty interesting. I like that they're having a massive amount of the tokens going into the DAO treasury because that's what the governance, the token is going to be useful for. It's going to be distributing kind of that treasury. And then we have 27% going to team and future team. Damn, all eyes on the Fed, massive impact on the markets. Wow. As always, my dude, as always, especially right now because we're at a pivot point for the Fed, right? They want to see, the market wants to see some sort of a pivot coming in. It's happening. Okay, so do you qualify for the Arbitrum airdrop? It tells you the qualifications. We'll go over them right here. So if you have less than 3 points, you will not be eligible for anything. Unfortunately, I'm not eligible for anything. I'm not an active trader, so I don't actually qualify for this airdrop, which is fine. If you have more than 12 or more, you get 10,250 tokens, which is a massive amount if you really consider it. And especially if they do come out at something around $1, that means you're just getting airdropped $10,000 just for being active on the network. Now, don't get too excited because the date that they're taking the snapshot has already passed. So if you just start frantically trading, you're not going to qualify anymore. But so here's the list of qualifying actions, and if you do 3 or more of them, you will receive an airdrop. You would have already had to do them, but they range from different things like conducted transactions during 2 distinct months. Nobody knows about those months until after the snapshot had already happened. 4 transactions are interacted with more than 4 different smart contracts. More than 10 transactions are interacted with more than 10 different smart contracts. So you kind of get what the thing is here. If you traded with an aggregate volume of over $250,000, which if you're an active trader, that's very easy to get to hit because every time you buy and sell, if you do $100, you buy $100, you sell $100, it's $200 in value. You do that a bunch of times throughout really multiple months, up to like 9 months. Right? So yeah, it's cool. Come check it out, or at least just go to their governing website and you will be able to see, hey, let's go. I got the hat already. It says the goal is 4, but I set it to 1, so we'll count that as a win. Thank you so much, Eric. Appreciate you, boss. you just go to their website and just go and hook up your wallet, and it will tell you, not Masari, but go to Arbitrum's website, hook up your wallet, and they will tell you if you qualify or not. Now, Arbitrum already exists. So this is not a launch of a new layer 2 solution. The solution has already been in existence for quite some time. This is the launch of a governing token. Let me say it again. This is the launch of a governing token. So the layer 2 solution has already been in existence and has been applicable. You could use it. You could build on top of it for months, maybe even more than a year. I don't know exactly when it started. So we have the luxury of being able to compare Arbitrum to Polygon Matic, to Optimism, which is exactly what we're going to do here. So the technology. Polygon exists on a side chain that runs parallel to Ethereum. Arbitrum and Optimism are optimistic rollups. So Polygon uses something called ZK rollup, or a zero knowledge rollup, and it's a way for them to prove that they know information without actually showing the information itself. Optimism and Arbitrum use optimistic rollups, which is them saying, trust me, bro. That's kind of what it is. And they have different methods of going about proving that you can trust me, but Polygon actually proves it, and the optimistic rollups are just trust me. So we'll get into that in a minute. I'll go over the difference. I have another article coming up next slide, and we will go over that. If you guys want to follow along, go over to YouTube. It's the exact same, That Investor, at That Investor. I appreciate you following me, Green Puristan. So the consensus mechanism for all three of these is proof of stake. Polygon is proof of stake in and of itself, and then Arbitrum and Optimism just rely on whatever their mainnet is, and their mainnet is Ethereum, and Ethereum's proof of stake. So what's going on technically Web3? This article is a little bit old, so it says currency of transaction. Polygon has Matic, Arbitrum has Arb, it's coming out tomorrow, and Optimism has OP. Now, what's really cool and kind of a benefit to Arbitrum, something that I was really interested when I saw, was that Polygon uses Solidity for their coding language, okay? So they're EVM compatible. Arbitrum is EVM compatible, but they made their own machine. So they made an Arbitrum virtual machine. And so it is EVM compatible, which is Ethereum's virtual machine. Meaning that you can build on top of it and be supported in multiple different languages, and they list out some of them. So for example, in Polygon, you are limited to Solidity and Viper for coding languages, versus Arbitrum supports all EVM programming languages such as Viper and Solidity, Flint, and YUL+. So they continue. They have a more broad spectrum, which is something that I enjoy seeing, because then it means that there's less of a barrier to entry. If somebody wants to come build on Arbitrum, they don't have to be like, oh shit, I don't know how to code in Solidity. I don't know how to code in Solidity. I only know how to use Flint. Can I still build? Yes. And Optimism is limited to Solidity. Now, the transactions per second. The TPS is something that's very important for any blockchain. Ethereum is limited to like 25 transactions per second, which is why we need a layer 2 solution on top of it. And you can have multiple solutions. I mean, we have a lot. We have like a dozen different solutions. Polygon allows up to 65,000 TPS, theoretically, which is a good thing. That is the threshold laid out by Gary Gensler, to which he believes is needed in order for any blockchain to compete, is around 65,000 TPS. Why? Because that's what Visa is able to handle, 65 transactions per second. So Polygon is already theoretically there. I don't believe we've actually hit that before, and we'll go over that in a second too, but Arbitrum's at 40,000 and Optimism's at 2,000. So yeah, we'll come back to this chart in a second, because I feel like we're touching on multiple things that I want to touch on for real quick. You can, because each of these are built on top of Ethereum, Optimism, Arbitrum, Polygon, you can go to Etherscan and check it out. So here we have Optimism, and you can see, we'll refresh this so that you guys know I'm being honest with it. The latest transaction index, Optimism has had 3.3 transactions per second. Polygon has had 33 transactions per second, and Arbitrum has had Oh, 10 transactions per second, okay? So those limits that they put on their charts like that, and whenever you see a blockchain toting a, look at, we can do 1 million transactions per second, that's theoretical. So you have to actually go look at the blockchain and verify what are they actually what are they actually doing right now. So maybe the network's just not that congested, and so 10,000 or 10 transactions per second is all that they needed, right? Polygon has 33 transactions per second. Maybe that's all that's needed, but right now they are not doing anywhere near, they're not even doing 100 transactions per second combined. So keep that in mind when you're looking at stuff like that. Now, if you guys have any questions so far, feel free to throw them in the chat. I'm looking at both chats so that I can keep up to date with everything. Let's see. I liked starting in Solana. SPL tokens were so easy to make. Command line blockchain felt familiar. I like that. That's good to hear. Yeah, Solana is one. I'm a fan of Solana because of how easy they made everything. They tried to make it all as simple and smooth as possible. If you have a TX price histories, that would be a top-notch. Def bringing up great points. Yes. Yeah, and you're benefiting there, Eric, because you get to actually see what I'm showing you guys. You get to see it. So I did not think of bringing up the transaction history, but I do I kind of did, actually. We'll get right into that one, I guess. So this is a chart here, is Arbitrum daily transactions chart. So you can see it's been an astronomical rise in daily transactions. So right now, recently, Arbitrum has been hitting transactions per day upwards of 1.2 million. Okay? So that's crazy. That is crazy. What's going on, Sofa? Hi from Iowa. We're not talking about XRP today. Thank you, though. We're talking about Arbitrum. So Arbitrum hit upwards of 1.2 million transactions per day. Optimism right now has been sitting around 300,000 transactions per day, but it did peak back in January, early January, at 800,000. And Polygon peaked back in the euphoria of the bull run at 8.8 million transactions per day. So massive transactions per day. That was back in July of 2021. Now Polygon's chilling around like 2.8. So Polygon is the clear winner here. However, we're looking at trends. We want to look at trends. Where are things trending? So Polygon, since July of 2021, has been trending down with transactions per day, which is to be expected because we're in a bear market and less people are using it, right? The networks are less congested, so there's less of a need for a layer 2 scaling solution. There's less of a need to avoid some of the Ethereum gas fees via a layer 2 solution if Ethereum's gas fees are not astronomical. With that being said, Optimism and Arbitrum are gaining on Polygon at a rapid pace. Arbitrum is gaining the absolute fastest. Optimism recently had a crash in their transaction volume. Maybe that was something to do with Arbitrum gaining a lot of popularity because they started spiking around the same time. Maybe it's unrelated. We don't know for sure based off just this one chart. But this chart here, and Eric, if you're still here on the YouTube stream, anyone who's looking at this YouTube stream right now, this is a picture-perfect chart for something I like to look into when I'm investing into stuff. The daily transactions chart here for Arbitrum is gorgeous. It's just going up and to the right at a parabolic pace. Now, this is fundamental research on what Arbitrum is doing. These transactions per day chart here. Yes, we're looking at a chart, and so it looks like it's a technical thing, but this is a fundamental aspect of a layer 2 scaling. And Arbitrum has just been outperforming all of the other three here, Optimism and Polygon. So I'm excited. I believe that's probably a good chunk of the reason why people are excited about it. Okay, but real quick, I want to go over the differences between the optimistic rollup and the ZK rollup, right? The ZK rollup was zero knowledge proof. What's going on, Garcia? Happy to see you here. That's a ton of transactions, right? A ton of transactions. I'm pretty sure the speech going to be an eagle-ish pump, rally, pullback. Yeah. I mean, talking about the Fed again, I think that it would be foolish of Jerome to not come out very hawkish, meaning like trying to push the market back down. I think he has to do that. We'll see. We'll see. I kind of believe he has to do that. Just things are getting a little too heated, and he doesn't want to lose the people to lose faith. But back onto Arbitrum again. Optimistic rollups, like I said, it's kind of a trust me bro. ZK rollups are more of a solid proof. Now, there's different ways to go about it, and we'll talk about that in a second. But the DeFi readiness, both, like all of them are available for DeFi. This chart here, optimistic rollup, similar execution model to the EVM, ZK rollup, lack of wide-ranging EVM support with few EVM-compatible ZK rollups. Validity proof, optimistic rollups are fraud proof to help proving validity. Zero knowledge proofs serve as a transaction validity proof. So the zero knowledge proof is the validity. The optimistic rollups use something called fraud proof. And that's basically just with Arbitrum, they're taking two individuals who made this optimistic rollup and they're pitting them against each other, telling them, like, figure out where the discrepancy is, if there even is a discrepancy in the first place. Now, as I'm saying this, I'm acknowledging the fact that there's the potential that you guys don't actually even know what a sidechain or a layer 2 is doing. Effectively, the layer 2s are taking congested networks, so Ethereum has more transactions than it's able to put through in a given block. The layer 2 will take those transactions, settle them within themselves on a sidechain thing. Sorry, Drippy, not today. Settle them on their own. In Polygon's case, it's a sidechain that's settling them, but in Arbitrum and Optimism, it's not a sidechain. It's just something built on top of it. It's an ERC20 token. They settle these transactions and combine them into less transactions, right? So, for example, one person, I might send something back and forth with one person like 10 times if I'm interacting with a smart contract. And on Ethereum, they need to validate each one of those transactions as it goes back and forth. So as I send something to you, validate it, goes through a block. As you send something back, validate, go through a block. On a layer 2, they're combining those in and just taking the final state after a given period of time and doing that as one transaction onto Ethereum's blockchain. So just something to keep in mind, I guess. Transaction finality. So in an optimistic rollup, there's a delay of 1 week in transaction finality for the challenge period. Ooh, okay. My sidechain, this is just my own thoughts here. Part of the rationale, or part of the struggle for blockchain right now, getting approved through regulations, is that there is no way to undo a transaction. So if I charge something on my credit card, I have 60 days to dispute that charge if it's fraudulent, or I have 120 days on most credit cards to say this product was delivered broken or bad. You know what I'm saying? This product, I want to return this product. Can you undo that transaction? And that's our current system, and that current system works okay in that regards, where I can get something refunded. If I accidentally succumb to fraud, then you know what I'm saying, I can get my refund. With blockchain, as soon as that block closes, it is done. You can't get it back. With an optimistic rollup, it's saying there's a delay of 1 week in transaction finality for the challenge period, meaning you could kind of have that approval for regulators in an optimistic rollup scenario. So financial institutions could use something like Arbitrum to do business with, because then they have 7 days to fight against a transaction that happened or undo a transaction if they have that fraud come up. Versus with something like Polygon or just using Ethereum, they don't have that. As soon as the ZK rollup closes and goes onto the block, it's done. So that's just something interesting to keep an eye on. That was me going off on a little tangent, just a little tangent there. Just trying to think, piece everything together as we go. Feel like you blew up quick, dog. Appreciate that, backed by blocks. I'm trying my absolute best, dude. Trying my best. Nothing like official crypto chaos. That man's about to hit 30,000 followers. He's going to give away a free Bitcoin too. How crazy is that? Unless he's just trolling us. What's good, boss? Hello, Crypto Rica. Recan. Oh my God. I butchered it again. You even told me last time I butchered it again. What's going on, Queen? or like an escrow service. I put the phone too far away. So they act as a transaction mediator. Yes, basically, yeah, an optimistic rollup, any layer 2 is kind of acting like a transaction mediator, but they're doing it in a decentralized way still. How's that XRP? XRP pumped. Now it's going back down a little bit. Just a pretty standard, I feel like. A good pump, don't get me wrong, big pump, but Bitcoin's great to pay for stuff from the cartel. Don't say that too loud. I'm gonna trace your wallets. I'm gonna report it. What's that service? I just wrote it down yesterday. I just found out about it yesterday. Mistrack. Chaos. I'm gonna report your wallet to Mistrack. Get it red flagged. Eventually they might just put you on a do not trade list. Careful. Careful. That's going to get expensive if they act like a transaction mediator for payment processors. That's true. That is true. That is definitely, I mean, I would assume so with you, yeah. I don't know if that's 100% true. I don't know. So, actually, according to this little chart that I pulled up here, transaction costs are lower on optimistic rollups versus a ZK rollup. Lower transaction costs as optimistic rollups do not post the proof of transaction and publish limited data versus a ZK rollup. Higher costs due to the need to verifying proof alongside expensive high-end hardware for creating ZK proofs. So most of us coming from the side of crypto where we don't want to trust anything, an optimistic rollup is absolutely based somewhat off of trust. Although the next thing it says there's no need for a trusted setup. Okay, maybe I have that backwards. This chart here is saying trust. Optimistic rollups, no need for a trusted setup. ZK rollups needs a trusted setup for working, but that doesn't make sense to me given everything that we were just reading off of. It's literally a trust me bro model where they don't have to post the proof of transaction. They can limit the data to just what they feel like you need to see. There are verifiers on the mainnet. Cool. And security. A ZK rollup uses cryptographic proofs and can guarantee security. Optimistic rollups emphasize crypto economic incentives for users for ensuring rollup security. So just like a proof of stake network would, right? Now, they have to be doing something right, okay? These optimistic rollups, they sound like they have positives and negatives, right? And so do ZK rollups, I guess. But essentially what I'm getting into is the total value locked. Because Arbitrum has been in existence for quite some time at this point, we can go look and see how much total value locked it has accumulated compared to Polygon, compared to Optimism. And then we can actually view and see what the values of each of these networks are. So Arbitrum right now, including staking, has $2.77 billion in total value locked. Polygon, including staking, has $1.19 billion in total value locked. So Arbitrum is significantly more than double the total value locked compared to Polygon. That's pretty huge. And total value locked just means like money that's locked into smart contracts. I am including staking, so if they have staking, it's also money locked up in that. Optimism has 1 billion, so it goes 1 billion, 1.2 billion, 1 billion for Optimism, 1.2 billion for Polygon, and 3.7 billion for Arbitrum. So these are pretty drastic changes. Arbitrum, the clear winner for DeFi for value locked, total value locked, which tells us that more contracts are being positioned on Arbitrums, or at least more valuable contracts. It could not be more contracts and just more valuable contracts locked up. So definitely interesting point there. I feel like it's just another point for Arbitrum compared to a lot of these others, especially paired with the growth in transaction volume, how it's just been absolutely skyrocketing to over 1.2 million transactions per day. But with that said, we do need to pay attention and we do need to acknowledge, can anything on L2s be considered DeFi though? I guess it depends who you ask. So I'm not including pools or borrowed money when I'm doing that. I'm using DeFi Llama, so you can check out DeFi Llama. That's honestly not something that I've taken the time to look into enough to make a call on that. I guess you could say that, yeah. The governance. As I was saying, Arbitrum doesn't even have a token yet, but it does have the most total value locked out of all three of those. And like to your point there, Aced, it could potentially, but in either way, right there when I was doing the comparison, I was keeping it standard. So even if it did, then it just still, Arbitrum is killing the other two. So Arbitrum has already been in existence for a while. The problem was, or the thing was, it didn't have a token. It wasn't, that's not necessarily a problem, but that meant that the governance for Arbitrum was being conducted by one individual party. Now, things are changing with the release of their token tomorrow, because this is, again, a governing token. So here on Masari, we're going over effectively just what this governing token is. I want to go through the distribution because the distribution matters. I know for whatever reason, it's a huge point of contention, inflation rates for projects and like the rate at which project leaders dump their coins and just dilute how much of a holding you have. I don't understand how that's a point of contention for people, but it is. And it's not good, okay? If the inflation rate or the dilution rate of a project is extremely high, it's not a good thing. Dumping the tokens is not, it's never a good thing. It's putting a mass amount of selling pressure on the market when it just doesn't necessarily need it. So I get a little heated because people argue with me about it, and it's like, I just don't think that you understand what you're talking about if you say something like that. But maybe I'm dead wrong. Maybe I'm the idiot here. So if we look at the distribution of Arbitrum, we said it in the beginning, but 43% is going to the DAO treasury, which is really cool. Team advisors are getting 27%, investors are getting 17.5%, and airdrop users, which is what's happening tomorrow, are getting 11.6%. So initially, it's going to be extremely volatile because only that 11.6% is going to be really released, right? And so they have a total of 10 billion tokens, but only 1.162 billion tokens will be released for people. So it's going to be very volatile. So that's circulating supply versus completely diluted supply. Now, those investors and team advisors, I believe, have a lockup period. I don't know exactly what the lockup period is. And I do know that this 10 billion tokens is going to have an annual inflation rate of 2%. So the inflation is not something that we're necessarily going to have to pay attention to unless they have a malfunction like Optimism did. Optimism had the same thing with the 2% inflation rate, but then they had a glitch and it was accidentally 20%, which was just not great. But they fixed it pretty quickly. Good, like to short it. Chaos, to be completely honest, I would probably short Optimism, or not Optimism, Arbitrum when it comes out. I have a feeling it's going to come out above $1. Like the IOUs that are trading on the market right now are trading at like $5, and I feel like it needs to fall 90% before I'm even interested in purchasing it. But that's my own opinion on it. So yeah, I would not. I was going to save this for the end of it, but personally, I would not touch Arbitrum until it's under $1 by a long shot, and it's going to come out probably a lot more than $1. I'm speculating there, and that's just my own 2 cents on it. I don't usually do price predictions like that, but just looking at everything, not for me yet. I want to buy it, but not for me yet. Airdrop today, it's down 50%. Space ID, interesting. Interesting, yeah. Okay, so The governing structure, we'll go distribution, we went over distribution, the governing structure. The Arbitrum DAO governance structure comprises several entities with different levels of authority. So we have the Arbitrum DAO, which is sitting at the top. Underneath the Arbitrum DAO, we have 3 subcommittees: the Data Availability Committee, the Security Council, and the Arbitrum Foundation. So the Arbitrum DAO is the governing by ARB token using the Arbitrum governing contracts, which exact control over the following assets: the Treasury, Arbitrum 1, and Arbitrum Nova. So these are all different aspects of Arbitrum, but the Treasury is what I like to pay attention to because that holds 40-something% of the tokens. And I want to pay attention to how the community views it's going to be a good idea to be sending those, right? It was down 80 a day after. Blur dropped a few weeks ago. I did see Blur. When's the airdrop's tomorrow? The airdrop's in less than like 24 hours. I would go connect to their website, Arbitrum. If you go to Arbitrum's website, at the top of it, they should have I'm not eligible, as you can see right here, but they should have a little thing at the top saying like, claim your airdrop or see if you're viable, and go click on that, connect your wallet. Just make sure you're on the correct thing, right? Just make sure you're on the correct website. You don't want to accidentally connect your wallet to a malicious scam. Arbitrum token holders can propose, vote on, and effectuate, just making me look like an idiot, on-chain proposals using Arbitrum investment protocols, AIPs, not EIPs, AIPs. Arbitrum Foundation. So, okay, the Security Council. This is interesting, and this is going to raise red flags for some people. It's interesting. Security Council oversees an elected 12-member multi-sig wallet empowered to perform emergency and non-emergency actions. The Security Council is authorized as emergency backstop and routine operational council. They can perform an emergency action with 9 of 12 approval. It would then be able to execute any software upgrade or required action to protect the integrity, confidentiality, or availability of the Arbitrum DAO chain. After performing an emergency action, the council must publish a full transparent report. After, not before, after. So it can also perform non-emergency action with 7 of the 12 approval to implement routine software upgrades, maintenance, and parameter adjustments in a non-emergency setting. These actions allow the DAO to bypass the voting stages of an AIP to the layer 2 waiting period. So the Security Council is in charge if they want to. The Security Council is voted in by our token holders, I believe. Yeah, the security elections will be conducted every 6 months by the DAO via an ARB token holder vote. So, councils are subject to removal before the end of their term with a 5/6 majority vote in favor of removal and a 10% quorum. So you can go see who the initial council is going to be comprised of, and you can go see their token addresses. It's kind of interesting. So let's see what you guys are talking about. Quant looks ready for a big breakout soon. Ooh, and pay attention to that, man. Chaos has been on fire with his callouts recently. What's the correct website? Correct website is arbitrum.foundation. Yeah, arbitrum.foundation. If you just type in Arbitrum crypto, there'll be a website that pops up. So the people in the organization, what did they come out with? What did they come out with? 0.25? Are you talking about the Federal Reserve? Yeah. It was the... Yes, they did. It was clear as day. That's what they had to do. They had no choice. And the Fed futures had priced it in completely. So you can see for Arbitrum, the 12 people who are on the board. One is from the Seller Network. One is from Off-Chain Labs, which is the company that made Arbitrum. One is from Dodo. We got a software engineer at Etherscan, the co-founder of Off-Chain Labs, a Layer Zero Labs co-founder, CEO. someone from the security researcher from Ethereum Foundation, someone from MakerDAO, another Ethereum Foundation. So there's not a huge variety in where these people are coming from, but definitely a variety. Yeah. Why does it matter what the distribution is? Again, it matters what the distribution is because we're going to look at Optimism's token here, okay? Optimism is going to be a good example because they are really, I think, the same size. They're both a $10 billion market cap, which is wild. Sounds like a decent team in my novice opinion. I would kind of agree with that, yeah. So we'll look at Optimism here real quick. So if you go to the market cap for Optimism, Optimism being one of the competitors, they airdropped back in August last year, at the beginning of August, I think end of whatever month comes before August. They reached, in that spike that happened back there, they reached a market cap of around $450 million, okay? Currently speaking, the market cap is just under $900 million. So it was a double up in the market cap. Pay attention because this is very important. This is the part that confuses people, so we'll pay close attention here. If the market cap doubled and there is no inflation or there is no dilution of the supply, then the token price should also double. I'll say it again. If the market cap doubles, the token price should also double if there's no dilution or inflation. What did the price of Optimism do during that same period? It was $1.90 back when the market cap was 450 million. Now that the market cap is 900 million, the token price is, well, when it was 900 million, the token price was $2.89. So if we take $1.90 minus $2.89, you get 99 cents. Is a price increase of 99 cents a double when you compare it to the price having been $1.90? I'm just curious. Is 99 cent increase a double? No, it's not. It's not. It is a 50% increase, okay? So the token had a 50% increase even though the market cap doubled. The market cap had a 100% increase and the token price had a 50% increase. Meaning there's discrepancy, okay? Meaning they are diluting. Somebody is dumping on the circulating supply. Something is happening to the supply where it's not keeping up. The price of the coin is not keeping up with the market cap. That's why we pay attention to initial distributions, because you look at something like this, and when Optimism came out, it was around like 30% of the supply was released, and then over the next year it went up to 50%. Over the next year it's going to go up to 75-80%, and then by year 4 it will be at 100%, meaning then you get to that 2% inflation and the dumping stops or calms down at least. I don't understand how it's such a hard concept for people, but it is for some reason. Damn, I wasn't eligible. It's unfortunate, but you'll have time. It is what it is, right? That just means you don't trade too much. Circulating supply is very low. Yeah. You're doing a very good job explaining that. Thank you. Oh, wait, hey. I appreciate that. ZK proof tokens are popping in the past hour. Are they really? So Polygon's got to be pumping then. That's cool. Good to know. Yeah, that's most of my spiel there. Okay, wait, here was the last thing. So this is just comparing the Optimism and Arbitrum token launch. So initially, Optimism sent out more in airdrops than Arbitrum is. Optimism's core team and advisors got less than Arbitrum. Investors are getting about the same. The ecosystem DAO, Arbitrum, is getting significantly less than Optimism. However, the DAO treasury and ecosystem fund, Optimism's getting about double compared to, or Arbitrum's getting about double what Optimism had. So a lot more of the tokens for Arbitrum are going into a DAO, which the people who own Arbitrum's token are going to be able to vote on to tell where it goes. And then investors in Core Team own 44%. So with all of that being said, my opinion is wait. I'm going to be waiting. I want to own Arbitrum because I would like to own several of the largest layer 2s. I want to own Arbitrum because the transaction volume daily is skyrocketing, and I like the look of the growth on this chart, and if it's able to keep up with it. I want to own Arbitrum because according to DeFi Llama, they have about $1 billion more in TVL than the other layer 2 solutions. I want to own Arbitrum at a reasonable price though, and I have a strong feeling that tomorrow it's going to be launched at $3, $4, $2. It's going to be launched about 90% higher than what I want to purchase it at. I don't want to purchase it anywhere. I would like the market cap to be down around like 5 billion, 6 billion. But we'll see. Thank you, YouTube. Appreciate you for being here. TikTok, don't go anywhere. I'm still going to be here. I'm just closing out the YouTube live stream. Let me know what you guys think, though.